This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you in part by
TheStreet.com, featuring Stephanie Link, who shares her investment strategies, stock picks, and market insights with Action Alerts Plus, the multi-million-dollar portfolio she manages with Jim Cramer. You can learn more at TheStreet.com/NBR.
Hiring surge. The unemployment rate falls below 6% for the first time since 2008. So why have wages hardly budged? And is that about to change?
Burst of buying. Investors liked what they saw in the jobs report. The blue chip Dow index gained more than 200 points, which it hasn't done since March.
Market Monitor. Our guest tonight is recommending stocks that he says will do well as the economy and labor markets improve. We have all that and more tonight on Nightly Business Report for Friday, October 3rd.
Good evening, everyone, and welcome. Nearly 250,000 jobs were added to the U.S. economy last month, and that clear sign of sustainable growth sent stocks sprinting higher today. Here are the numbers from the Labor Department. The economy added 248,000 jobs in September, up from 180,000 in August, a number that itself was revised higher today. The nation's unemployment rate fell to its lowest level since July of 2008, edging down 2 notches to 5.9%. On Wall Street, the Dow shot up 208 points, its first 200-plus point move to the upside since March, and enough to close back above 17,000. NASDAQ up 45, S&P 500 added 21, its best day in 7 months. Now, the jobs data pushed the U.S. dollar index to a fresh 4-year high, and that sent the price of gold, among other things, sharply lower, dipping below $1,200 an ounce for the first time this year. And crude oil closed below $90 a barrel for the first time in a year and a half. Wrapping up the 5 past sessions, though, the major stock market averages did end lower for the second week straight. All 3 indexes were down more than 0.5%. Hampton Pearson now takes a closer look behind those latest job numbers.
Much to the relief of both Wall Street and Main Street, job growth rebounded sharply in September from the disappointing 142,000 payroll number for August. The Labor Department says job gains for the last 3 months averaged 224,000 when you include upward revisions for July and August. And the headline unemployment rate is now 5.9%, the lowest since the summer of 2008.
The unemployment rate now below 6%. When you combine that with initial unemployment claims below 300,000 solidly, what it says is that the labor force is getting to that point where it's what we would call full employment. And that means that wages are going to start increasing more rapidly in the months and quarters ahead.
Wage growth, however, was flat in September and up just 2% over the last year. But paychecks got bigger because people work longer hours, and recent data shows some of that money is getting spent. The job gains were broad-based, with professional and business service sectors leading the way. And the Labor Department says the creation of more higher-paying jobs is now outpacing low-wage job growth.
This labor market is tightening. To me, this is all about the structural versus cyclical debate on labor force participation. And I think you score one for the structuralists here, because we're seeing the unemployment rate come down, we're seeing labor force come down, we saw the number of discouraged workers come down.
McLean, Virginia-based Cvent highlights a good-paying job success story. It's a high-tech worldwide event planning business that's in the process of hiring 500 new workers, a 30% increase in their workforce this year.
Our customers tend to sign multi-year contracts. We have commitments for many years. So we have high confidence, in our revenue for the future years.
Perfect.
Vivian Laurencato got hired right after graduating from Duke University last summer. Nationwide, job prospects for recent college graduates are improving.
I'm always challenged. It's high energy. It's a young tech company, so it's growing. So all these changes are being thrown at you. And it's a very fun company to be in. Everyone looks forward to coming to work.
The bottom line, according to the Labor Department, every major sector of the economy has seen a net increase in jobs in the last 12 months. For Nightly Business Report, I'm Hampton Pearson in Washington.
Let's get more now on today's jobs report from our 2 guests. We've got John Manley, he's Chief Equity Strategist at Wells Fargo Funds, and Mark Zandi, Chief Economist at Moody's Analytics. John, Mark, great to have you with us.
Thank you.
John, let me begin with you because I want to ask you about the stock market. Does this jobs number, this strong jobs number today, erase all the worries that we had this past week about weak growth in China, Hong Kong protests, problems with the economy in Europe? Does this really change things?
Those are two questions, actually. I don't think it fixes anything. I think those are still issues out there, but I think they become less important. I think the key factor here is the U.S. economy is growing. We never know what the future is going to bring. Sometimes we're just more uncertain about it. Those are usually buying opportunities. I think the fundamentals are still good.
Mark, let's turn to a question that has been bedeviling these generally positive job numbers all year long, and that is the question of the labor force participation rate. Without getting too wonky, it basically says the number of people who are taking part, either looking for a job or have a job. It's been coming down. But my guess is that it is partly coming down for reasons that are voluntary rather than coercive. In other words, there are a lot of retirees who are voluntarily stepping out of the job market. And given the pace of jobs growth, people who want a job can probably find something.
Well, I think you're right. I think the principal reason for the decline in participation is retirement. We've got a lot of baby boomers that are in their late 50s, early 60s, they're starting to retire, and that's bringing down participation. There's other structural forces, the disability insurance program and Social Security is having an impact. But I also think there is a cyclical element to it. If you look at the number of people who stepped out of the workforce but say they still want a job, they're not looking for various reasons. Maybe the pay is too low, there's not enough job opportunity. That's still very elevated compared to where it was prior to the recession. So I think those workers will come back in, and they will, at some point, lift labor force participation and labor force growth. Not a lot, a little bit, because you still have that retirement effect that's going to play out over many years. But there's still an element of a cyclical element to the decline in participation, and that should come back in as the labor market continues to improve.
Mark, I want to ask you a broader question about the economy. So we have the unemployment rate below 6%, 5.9%. We just heard Brian Westbury talking about full employment. Oil prices coming down, U.S. dollar getting stronger. Connect the dots for us. For people at home listening to this, how's the economy doing? Are we really out of the woods? Is everything okay now?
We're certainly getting out of the woods, Susie. I think we've made a lot of progress, and the economy is, all the trend lines look really, really good. We still have a way to go. The unemployment rate is still elevated compared to where it should be. We still have people who stepped out of the workforce that need to come back in. And we still have a lot of part-timers out there that would rather work full-time. So there's still a lot of slack. By my calculation, if everything kind of sticks to script and all signs are good on that front, then by the end of 2016, so 2 years from now, that's when we'll be back to full employment. So we still have, everything looks good. We're on track, but we still have a way to go before we feel like we're completely out of the woods.
John Manley, let me turn back to you. Today's rally, was it significant in and of itself? Was it really just a relief rally or a reaction rally, or was it the end of something or the beginning of something?
Well, the market was off 4 or 5% at its worst, and it felt much worse than that. I think it is the beginning. I think it is the beginning of a pretty good earnings period that should be coming at us over the next 2 or 3 weeks. I think that puts the market on an upward pace over the very short term, and I still think we can go higher for a year or two before we have real problems.
So what happens next week, John? I've just put you on the spot for real near term. Are people going to come back after the weekend and be in the buying mood and to continue this, or are we going to just go the opposite way, have triple-digit losses again?
Well, there'll be triple-digit losses sometime, but I think over the short term, things get better. We're right on top of earnings season, maybe a few days off, but it's coming at us very quickly. So far, I see no reason to think the numbers won't be as they've been for the last 3, 4, 5 quarters, better than people expect and a reason to buy, not sell stocks. Okay,
John, Mark, thank you so much. Have a great weekend. John Manley with Wells Fargo Funds, Mark Zandi at Moody's Analytics.
Well, while the economic data here in the U.S. is encouraging, that is not the case in Europe. Michelle Caruso-Cabrera has more.
The good employment data today in the United States only highlighting just how bad the situation is in Europe. Every data point out of Europe this week, negative, and suggesting the economy there is just getting worse. And now there's also disappointment that the European Central Bank hasn't done even more to stimulate the economies there. Increasingly, analysts are beginning to whether Europe is turning into Japan. Japan stagnated for 2 decades, and the consensus is that the country wasn't aggressive enough on monetary policy, wasn't aggressive enough about cleaning up zombie banks, and wasn't aggressive enough about doing structural reforms to the economies. All of those things are needed in Europe right now, and they know that. But politics has kept a lot of it from happening. But if they don't get it done soon, at best, they could turn into Japan. At worst, they could face yet another crisis like we saw in the summer of 2011. There's a lot of tests coming for that continent. For Nightly Business Report, Michelle Caruso Cabrera.
Still ahead on the program, a new wave of healthcare regulations is creating a shortage of people that help keep hospitals up and running. Mary Thompson looks at where the jobs are next.
More recalls yet again for General Motors, this time involving over 500,000 cars and sport utility vehicles. The latest recalls are for Cadillac and Saab SUVs to fix a rear suspension problem that could cause drifting at high speeds, and for the Chevy Spark, that's a compact car, to secure the hood from opening while the car is moving. GM also told dealers to stop selling the new 2015 Chevy Colorado and GMC Canyon pickups in advance of a recall over a potential airbag problem.
Hundreds of thousands of Americans got jobs in September, as we've been reporting tonight, but the medical industry is in desperate need to hire skilled workers, especially medical coders. A growing shortage of these back-office workers threatens to disrupt the flow of funds from insurance companies. In our ongoing series, Where the Jobs Are, Mary Thompson takes us to Springfield, Missouri.
Behind the healthcare industry's front lines, a growing need for workers who help keep the money flowing in.
Right now, there's a dramatic shortage of skilled workers in the market.
The skilled workers are medical coders. They review a patient's record, assigning codes to diagnoses and treatments that insurers use to pay medical providers. Tori Barnhouse is president of Trust HCS, a firm that contracts coders to hospitals. He's hiring as a change to industry standards is driving demand.
Well, over the course of the next 12 to 18 months, we'll double our staff.
By next October, a federally mandated change will increase the number of codes to more than 140,000 from the just over 17,000 used now. The change seen cutting a coder's productivity in half while increasing demand for new coders by 50%. To meet this need, David Strong of Springfield, Missouri-based Cox Health is recruiting from current staff.
We have a college that has a certificate program for coders. We're also incentivizing some of our employees that were in transcription and imaging jobs to go through that training to be coders.
He's also paying experienced coders more to stay.
We've recognized that there's an increase in salaries for coders out there now, particularly with the contract agencies, so we're putting in place a retention bonus for our current staff.
Coding is an accredited position, requiring more than 700 hours of coursework in areas like anatomy and pharmacology. Pay can range from $30,000 to $60,000 a year or more for coders who become supervisors or auditors. With most of the work done online, it provides 37-year-old Jill Tracy, transitioning from a career as a radiation technologist, something else: flexibility.
I get up, I get my kids off to school, and I grab a cup of coffee and I sit at my desk in my pajamas and I code from home all day.
But coders don't sit still. Julie Davidson's been doing it for 17 years and takes classes on a regular basis, including those for the new codes.
As a coder, we go through training, all the time because it's part of our job. I mean, everything changes on a regular basis.
Changes creating a prescription for job growth. In Springfield, Missouri, I'm Mary Thompson for Nightly Business Report.
Mylan hikes its guidance, lifting shares, and that is where we begin tonight's market focus. The drug maker says its third quarter and full year earnings should be well above what analysts expected, and that is thanks to new drug launches and drug approvals that went through during its latest quarter. Shares popped 8% to 50.23. Walgreens also saw its shares rise after reporting strong September sales. Drugstore chain operator saw a 9% increase from last year, helped mostly by a jump in its pharmacy sales and prescriptions filled. Shares there up 1.5% to 60.77. Facebook may be plotting its first steps to get into the field of healthcare. According to reports, the company is exploring creating online support communities that would connect Facebook users who are suffering from various ailments. Shares of the Facebook company up to 77.44.
Yahoo is reportedly looking to invest in Snapchat as part of a fundraising round. It's expected to value the startup at $10 billion. The application that lets people send pictures that disappear has more than 100 million users, and last year it was valued at just $3 billion. Separately, there are reports that Yahoo has bought the messaging app Message Me. Shares of Yahoo up more than 1% to $41.03. Salix Pharmaceuticals is scrapping its merger with the subsidiary of an Italian drug maker that would have allowed it to shift its tax base to Europe. This comes as the U.S. government has cracked down on these so-called tax inversion deals, where companies move their headquarters overseas to cut their tax burden. The stock rose 1% to $152.87. Medtronic is changing its tax inversion deal as well, but it still plans to go through with its acquisition of Ireland-based Covidien. The medical device maker says it'll restructure the transaction by using $16 billion in debt rather than using cash held overseas to complete the deal. Medtronic shares jumped 3.5% to $65 and change. And Sprint has launched a new round of layoffs. The job cuts are expected to cost the wireless carrier $160 million in its second quarter. Shares fell slightly to $6.24.
Our market monitor tonight says now is the time to take a look at economically sensitive stocks. He's John Traynor, Chief Investment Officer at People's United Bank's $5.5 billion wealth management division. John, welcome. Good to have you with us. You like cyclicals. Why? And why specifically in the face of a lot of slowing growth outside of the United States?
We like the cyclicals because we believe the U.S. economy is finally going to break out of this 2% growth that we've seen over the last 5 years. The second quarter was great. We think that will continue. So we think the third and fourth quarter will be close to 3%. So we're encouraged by the U.S. economic growth. And we think Europe will see some positive news, not great, but positive news next year.
Let's take a look at some of the stocks that you're recommending to our viewers tonight. And at the top of your list, Capital One, the ticker symbol COF on the New York Stock Exchange. Why do you like it at $82?
We like Capital One. We've owned it for a while. We want to be exposed to financials. We're actually overweighting financials in our portfolios right now. Financials can do very well in a gradually rising interest rate environment, which is what we see next year. Plus, as you saw with the employment number, as jobs increase, consumer balance sheets will do better. So we think Capital One has the wind at their back right now from a credit quality standpoint. They've got a very diversified lending business exposed to credit cards, but a very diversified lending business. We like it quite a bit. It's trading at a nice multiple. We see good earnings growth next year.
Another financial is your second pick, Discover Financial, but you yourself concede that over the past 5 years or so, this stock has not done much. What's going to change?
We like Discover. We've actually owned Discover for the last 3 years. It's one of our longest held positions. Discover is about as pure a play as you can get on credit cards. Again, we like financials. Discover will do better as consumer balance sheets improve. They've done a great job of rationalizing their business. So we like Discover. You know, if you take a look over the last 5 or 10 years, stock hasn't done all that much, but we think it's poised for continued growth.
Past year looked pretty good. That was a nice chart.
Absolutely, absolutely. It's been a good holding for us. It's a nice steady grower. Very good name for us.
Okay, and you have a tech stock to tell us about, data storage company EMC, and this is a special situation, isn't it?
That's right. That's right. We like the fundamental business. We like their underlying business, data storage. We saw the news on J.P. Morgan this morning with security around their data. EMC is an important company that can help in that area. There's also, as your viewers will know, there's also some talk that EMC could partner with some other tech giants. We like the business, and we think a combination with another tech giant could make this an even better story.
Quick answer, John. Will the markets end higher than they are today at the end of the year?
Our target is 2,050 for the S&P 500, where there are other firms that are a little higher than us, but we think we're going to be moving higher, yes.
All right, John, thank you very much. Have a great weekend. John Trainer with
You too.
People's United Wealth Management. And coming up, for your ears only, how one entrepreneur is using 3D printing to solve a common problem. Earbuds, those earphones that don't fit right. Her story next.
UPS and FedEx are working hard right now to make sure your holiday deliveries arrive on time this year. Package deliveries were a disaster last year, as you remember, because of that wicked winter weather got the better of late shoppers and retailers that overpromised speedy deliveries. Now UPS is pressuring e-commerce companies to hold their big sales in mid-December instead of just days before Christmas, and to stagger sales in different parts of the country to help deliveries. It's also asking retailers to end any offers of free overnight shipping on December 23rd.
In the last year, we have seen big companies like General Electric and Boeing begin to use highly sophisticated 3D printers to make parts for jets, making mass production with 3D printers a reality. Now, one woman got the bright idea to make a customized consumer product using 3D printers, earphones, because no two ears are alike.
Your ears are quite unlike anyone else's.
No wonder so many of us seem to share a common problem with earphones.
And a lot of consumers say, my right ear is so weird, nothing stays in.
It bothered Nikki Kaufman for years.
Lots of ill-fitting earphones. Nothing was comfortable. I would leave them in hotels or throw them away because I didn't ever find a pair that was for me.
So she opened Normal over the summer, aiming to make earphones that fit the new normal.
And it fits like a damn glove.
Kaufman's been watching entrepreneurs all her life, starting with her dad. As a competitive swimmer, she learned to tackle challenges. Later, she was a founding member at Quirky, a New York startup that helps entrepreneurs turn their ideas into real products.
I learned a lot about perseverance and endurance, and when it's hard, how to keep going and how to work with different types of personalities and in different environments.
At Quirky, she learned how 3D printers could speed the prototyping process. A little more than a year ago, it hit her. Instead of a one-size-fits-all headphone, she thought, what about making a pair for each unique set of ears?
So these are the 3D printers.
She knew nothing about making earphones or good sound, but with only a rough prototype, she got enough investors interested to raise $5 million. She and her team built their headquarters in New York. It's part retail space, part office, and part factory. What's not normal, at least not yet, is the way she's using 3D printers, 10 of them, with a base cost of about $60,000 each.
Normal is one of the first companies to use 3D printing to mass produce a consumer good.
Large-scale manufacturing with 3D printers is still in its infancy. At Normal, headphones can be mass-produced, yet customized.
Ears, really, no two are alike, even those on the either side of your own head.
So how does it work? Well, if you can't come to their store,
ready, go.
The Normal app will instruct you to hold a quarter near each ear as you take a series of photographs.
Ear all clear.
Pick a color and a cord length, and Normal's proprietary design process, that's their secret sauce, takes care of the rest. The printing alone takes about an hour, then there's some post-processing.
It gets cleaned, it gets sanded, it gets smoothed, it gets a coat of soft touch spray. Then it gets assembled, matched with its cable assembly that you chose in the app, the driver that you chose.
The cases are unique too, a fit for your pair only. In person, you can get same-day service, otherwise shipping is usually processed within 48 hours. Either way, the cost is $199.
It's a premium product. We feel that that's the right price point for the product that we're delivering right now.
That's now, but the future?
The idea could be much larger than headphones and earphones, right? There's other wearables or other products or things that you could make mass customized by 3D printing. We're not working on those yet, but certainly thinking of ideas.
I'm going to take out my IFB and use a new one of her things.
Normal.
Yeah, use a normal one. Kind of gets the imagination running, doesn't it? Making custom earphones used to mean a trip to the doctor's office to get silicone squirted into your ears. By the way, Normal has 24 employees, and that space they build in Manhattan can be adapted to add more printers if demand warrants.
And it looks like it's headed that way. Well, finally tonight, you know things are tough when even Ben Bernanke can't refinance his mortgage. The former head of the Federal Reserve told an economic conference that he recently tried to refinance his current home mortgage but was turned down. Bernanke, who left the central bank in January, made at least $250,000 for his first public speaking gig. Now, that says that lenders may have gone a bit overboard in setting tight credit conditions for homeowners, you think?
It's very hard for people who become contractors and don't have a steady sort of W-2 paycheck to show. The banks often don't like that. They want to see that income, but he's got plenty of income.
He's got a book contract. He has all these expensive speeches. Why is he refinancing?
I bet he's heard from some bankers today.
That's Nightly Business Report for tonight. I'm Susie Garup. Have a great weekend, everyone.
And the same from me. I'm Tyler Mathisen. Have a wonderful weekend. We'll hope to see you back here on Monday.
Nightly Business Report has been brought to you in part by
TheStreet.com, featuring Stephanie Link, who shares her investment strategies, stock picks, and market insights with Action Alerts Plus, the multi-million-dollar portfolio she manages with Jim Cramer. You can learn more at TheStreet.com/NBR.
I'm Susie Garup with a Nightly Business Report news brief. American businesses added 248,000 jobs in September, and the unemployment rate edged down 2 notches to 5.9%, the lowest level since 2008. That good news sent stocks rallying on Wall Street. The Dow shot up 208 points, the Nasdaq rose 45, and the S&P added 21 points. A stronger U.S. dollar sent gold prices below $1,200 for the first time this year, and oil dropped to $90 a barrel for the first time in a year and a half. Radio Shack got a $600 million lifeline from investors to restock its stores. And it's not easy to get a loan, even if you're Ben Bernanke. The former Federal Reserve chief says he was turned down when he applied to refinance his home mortgage. Be sure to tune in to Nightly Business Report right here on your public television station.